Hello guys, welcome back to the step-by-step tutorial video on how to trade the forex market. In our previous video, we came to the conclusion that 7 and 14 moving average are used as a signal to make entry on a particular currency pair. So if you haven't watched that, you go back to the previous video so you can have knowledge of 7 and 14 moving average and how to make entry on a particular currency pair. In this video, we'll be talking about 200 moving average and 89 moving average. So let's start with 200 moving average. Let me delete this 7 and 14 moving average on this chart. So swipe left, delete, or just edit it to 200. Change the color to probably blue, and that's it. That's 200 moving average on our chart. So the 200 moving average is used to determine the overall trend of a particular currency pair at a particular period time. It tells us the direction of a particular currency pair, whether the market is up or down at a particular price. When the candlestick, these red and green lines, sticks on the chart, when they are above the 200 moving average, which means the market is in uptrend. So when they are below the 200 moving average, it means the market is in downtrend. There are so many examples here. Let me just. So, for example, now at this particular time, the candlestick is below the 200 moving average, which indicate that the market is in a downtrend. So, everybody in this market will be selling their currency pair. Mostly people will be selling their currency pair, and vice versa. When the candlestick is above the 200 moving average, everybody is going to be buying the currency pair at that moment. So you don't trade against the trend, you trade with the trend. When the market is in uptrend, you buy. When the market is in a downtrend, you sell your currency pair. So that's that on 200 moving average. When the candlestick is below the 200 moving average, it means downtrend, and when the candlestick is above the 200 moving average, it means uptrend. So let's talk about the 89 moving average. Let's add 89 moving average to our chart. We click on the F icon, we click on plus, we click on moving average, we change this figure to 89, we change our color so that we can differentiate it probably to yellow, and click on done. So that's 89 moving average on our chart. 89 moving average is used to indicate change of trend. I mean, when trend start moving up to down, it means the market is about to change trend. For example, the market is in uptrend here. The market is in uptrend here. Can you see the date? 26 April 7, 26 of April, around 5:30. The market is in uptrend, and when you get to 27th of April, the market started changing direction toward downtrend. So the 89 moving average tells us that the market has already been changing trend, that it is possible for everyone. It is time for everyone to close their order. If you are in uptrend and the market is about to change trend, then it's time for you to close your trade. And if you are in downtrend, if the market is about to change the direction to uptrend, then it is time for you to close your trade. So that's that on 200 moving average and 89 moving average. 200 moving average tells us the overall trend of a particular currency pair, either they are uptrend or downtrend. While 89 moving average tells us the change in direction of a particular trend. When the candlesticks start crossing that 89 moving average, it shows that the market is about to change the trend from maybe uptrend to downtrend, or downtrend to uptrend. So most traders use the 4 on chart. We use some use both the 7 and 14 and 89 moving average on a single chart to make their trading decisions. So we can add the 4 on our chart. Let me add it. So let's add some moving average. We add 7 moving average. Change the color to red. That's our 7 moving average. Change this to 14. Change the color to green, and that's our 40 moving. So we have some moving average, 40 moving average, 89 moving average, and 200 moving average on the single chart. Sometimes it's kind of be confusing to some traders. So some use only 14 and 7 moving average, while some use only 289 moving average, and there are some that can be able to use the four together on a particular chart if it is not confusing to them. So we use our 7 and 14 moving average. We use our 200 MA to determine our overall trend. So we use our 200 MA to determine. So for instance, this market is in downtrend because the candlestick are below the 200 moving average. So then we look for golden cross of 14 and 7 moving average to enter our market. So can you see the golden cross happen here? So we can use that as a signal to make a sell order. Then we monitor the market. When we notice any change in price, any change in candlestick direction, then we should know that the market is about to change direction. So we should be getting ready to close our orders. That's on 14, 7, and 89 with 200 moving average. So in our next video, we'll be talking about stochastic oscillator and how to use them. So don't forget to subscribe, drop a comment, and like the video. Thank you.